Please start.
Good morning. Good morning, all participants. Once again, welcome back. And today is the last session for this particular serial. And the balance of the paper 17, which is related party transactions and a bit on cyber security, I will discuss today. And I think the earlier classes is enjoyed. And if you have any issue, please let me know. And the main point of this related party transaction is that it is a legal compliance. So basically, when we look at for the audit of related party transactions, this is basically the compliance carried out by the or the compliance activities carried out by the entity under the Companies Act, and also it is covered under Income Tax Act to some extent. So the related party transactions, it is not barred, but with applicable compliances, related party transactions can be carried out. And similarly is the cross-border transactions. By cross-border transactions, we mean the transactions from India across any country in the globe. And they are also everywhere. The main motto or objective of this audit is, as I said, it is compliance. So compliance as to rules and regulations, number one, and also is there is any unjustified increment in cost or unjustified decrement in cost, which may result in inflation or deflation of profits. That is the main motto or objective of this audit. So one has to ensure that things are fine, things are in line with the government regulations, appropriate compliance certificates from respective places being obtained, and accordingly you can carry out the transactions. So now at the very outset, I want to clarify that what is related party. We know in our family life and otherwise also that a person is related to somebody. Means he knows, or in other words, we may say he or she is having a substantial interest in that party. So if someone, say in our normal family life also, if someone of my relative or related entity or related party is sick, suppose out of any disease, then we ask information. What about his health? Whether he is fit or he's unfit? Is he going to office, or if he's a school goer or college goer or is a professional? Then whether he is attending his office, his classes, his profession. So like that, we are connected by heart, one may say. And also sometimes we take care of many people. So these are basically the related parties. Though I will come to the definitions and which under what circumstances can be construed as a related party. Now, in the related party transactions, the business here will concern with the businesses and basically the provisions under Companies Act. So the business enters into various transactions with parties with whom they are related or have common interest, as I mentioned right now. Although such transactions are themselves legal, they may create conflicts of interest or impel other illegal situations and can impact the financial position of the company. It is not only in the financial position. Sometime back, you must have read in the newspaper that one of the selector from Indian Cricket Control Board is also having status of coach or mentor in one of the IPL team. So he is what is the corrective action here? He resigned from he has to either resign from the IPL team or maybe from the BCCI, so that this conflict of interest can be avoided. What will happen if the conflict of interest exists? If the conflict of interest exists, then it may so happen that this person can influence the decision making, say selection of a person, say some transaction which is of business interest, and all these can be uh, considered. as part of the uh, transaction or his stay in the other country. Therefore, in order to protect the interest of stakeholders and maintain transparency in business transactions with related parties are being regulated. Section 188 of the Companies Act 2013 specifically deals with related party transactions, which further captivate other provisions of the Act, including Section 166, 173, 177, and 184. If you can go back to this section, these sections are typically related to governance. So I have mentioned in course of this session some time back that governance is the core or the heart. So how to protect that? There are the companies or the entities. They have the audit committee, they have statutory auditors, they have internal auditors, they have management auditors, they have different business relations management, etc., so that they can keep the heart or the governance intact. So there are board of directors, there are audit committees. So all these are basically the protectors of the corporates in on the column of governance. So in other words, the governance is protected by the acts which prohibits certain activities and which allows certain activities with different sort of compliances. Now the who are the related party? So related party with reference to a company, as I said in the social situation also, somebody is relative to somebody. Somebody is related to X. X is related to Z. So this chain can go on and on. Similarly, in a company also, a director or a key managerial personnel or relative thereof, a firm in which a director, manager or his relative is a partner. So here the basic objective is that the fellow can destruct the decision making process or can influence the decision making process in his own way. So that is the primary objective of disclosures and approvals of the related party transactions. A private company in which a director or manager or his relative is a member or director. A public company in which a director or manager is a director and holds along with his relatives more than 2% of its paid up share capital. Any body corporate whose board of directors, MD or manager is accustomed to act in accordance with the advice, directions or instructions of a director or manager, and any person on whose advice, directions or instructions a director or manager is accustomed to act. So, however, nothing contained in the clauses A and B. Perhaps you can see the PPT, the PowerPoint presentation. In clauses A and B shall apply to the advice, directions, or instructions given in a professional capacity. So, in a person when in his professional capacity as an accountant or a director or a cost accountant, these capacities are called as a professional capacity. So holding subsidiary or an associate company of such company, subsidiary of a holding company to which it is also a subsidiary, so step down subsidiary basically, an investing company or the venturer of the company. So it's a wide list of persons or entities who can be considered as a related party. Say as a KMP is my relative, so that is again also a related party. KMP stands for key managerial personnel. So a director or a key managerial personnel or relative thereof. So if he is in a certain company, I have a relationship with that KMP, then probably that KMP can influence the decision. So like that, if you go on analyzing these 8 points, you will find that there is always a scope for influencing the decision. And that is why these parties or these persons are called as related parties. Now, this persons, a private company in which a director or manager or his relative is a member or director, A public company in which a director or manager is a director and holds along with his relatives more than 2% of paid up share capital. So again, is a stipulation that more than 2% cannot be hold. If it is there, then it's a related party. Holding subsidiary or an associate company of such company. So these are again related parties. So these transactions with these parties are termed as related party transactions. Now, related party transactions, if I want to see the related party transactions, then there is a checklist how we can check the related party transactions. The related party transactions, whether a list of the company's current related parties and associated transactions are available. As an auditor, when you are trying to see that whether the transaction with this party is a related party transaction, then you have to have a list which is a concurrent list. Means if it's a very old list, then there's a possibility that some of the related parties may not be related parties right now, because some company is a subsidiary company and that subsidiary is no longer a subsidiary. So the list must undergo a change. Similarly, again, some new company has been acquired, which is a subsidiary company, then that company should form part of this list, current list. And if it is not there, then transaction with that particular entity may escape this related party transaction checklist. So always it is better to ask for, suppose the audit period is December to February, then it is always better to ask for the last January status, where you can find out that these are the associated or these are the related parties. Whether minutes from board of directors meetings, particularly when the board discusses significant business transactions with related parties, are recorded properly. So again, here we are talking about documentation. In course of this session, number of times I have said, audit depends on mostly on documentation. Because when you are going to, and basically this audits were not a sort of operational audit. In operational audit also you require documentation, there's no denying the fact. But when you are trying to prove something that this point is a valid point or this point is not a valid point, under such scenarios, you have to have a favorable documentation to prove your point. That means the document should signify that what you are trying to prove is exactly the valid proposition. So as for example, you are trying to prove that transaction with X company, transaction of X company with Y company is a related party transaction, which company has not pointed out to you. So as an auditor, it is your duty to know in a better way that what is the status of Y company. And by any chance, whether this company comes as a subsidiary company or some other relationship exists, then definitely it has to be disclosed and all the paraphernalias or compliance as to related parties to be fulfilled. Now, whether omnibus approval or relevant approvals taken for the transactions from board. So in many a times, what happens is that the people who are in the board of directors, they don't have the time to see whether each and every transaction is falling within line or not. So what they do, they normally go for this omnibus route, where there are many propositions, where there are many decisions are presented before the board, and board will confirm that yes, approval has been taken, or if board is having some question, then they can provide the appropriate replies so that they can be satisfied about the situation that this transaction is whether a valid transaction or a transaction which requires modification or a transaction which cannot be carried out. So there can be different repercussions. There could be different ways of looking at a particular transaction or when it is presented for omnibus approval. So whether disclosures from the board members and senior executives regarding their ownership of other entities, participation on additional boards and previous employment history are made available. So again, uh, think of a situation when a present board member is agreeing to transact at a particular price certain things or maybe particular decisions with another company. Presently he is not in that company, but just before joining this company or uh, after joining this company he left the other company with whom they are going to transact now. So under similar scenario, the disclosure should be there that this board member was in that board, so that any transaction which is not at arm's length, if it seems like that, then that must be considered very carefully, because whether that particular director was in a position to influence that decision of the other company when he was there, and now he is in this company and he can be the person who can try to get it authorized sitting in this company. So there is a conflict of interest with respect to that person, and which is avoidable. So here the details of that board member is required, or the senior executive whose details are required, whether he is having any ownership in the other company, whether he was in the board of the other company some time back, and whether the this person is anyway connected with that company or not, and the previous employment history, which that can show or indicate that yes, this person was in other company, or this person was or this person is having a substantial interest in the other company just a couple of months back, like that. So this is a very detailed exercise on behalf of the audit team, who can ask for this information. If they get it, fine, or if they don't even get it, they can enter into MCA site, because I know one particular situation when company has not disclosed, and the auditor then went back to the MCA site. He used the name, the DIN number, DIN number of the director, director identity number, and when he used that, he found that he was in the other company some time back, which is not being disclosed. So the auditor objected to that transaction and for proper disclosure. And after that, the transaction was made with full disclosure and with full compliance. So the typical role of the auditors here is onerous. So one must understand this particular point. Whether bank statements, especially transactions involving intercompany transfers, automated clearinghouse transfers, and check payments. So these are again bank, if a company is regularly paying some amount to other company, but it is not a subsidiary as per company or not a related company as per the company's board, again those transactions to be critically examined, whether there's any flavor of any sort of royalty payment, or again getting the same material because that entity is somehow related, or maybe relatives related. So these are the very typical situations where the auditor must look at very critically. Whether press releases announcing significant business transactions with related parties are made. So press release announcing significant business transactions with related parties are made means if a transaction is going to happen or happened, then that is to be disclosed to the, if it's a listed entity in the BSE or NSE sites, or it is in the newspaper, that this company having a relationship with the other company and they are going to transact such a business. So the disclosure is one very important point, and also the compliance. So whether audit procedures that target related transactions include testing how related party transactions are identified and coded in the company's enterprise resource planning system. That means in the IT domain the company is using. So it is must be, if a transaction, a party is already flagged as a related party, then that entity must be updated in the IT platform also, so that any time the transaction happens, it will give an automatic flag that this is a related party transaction. And again, that transactions can be taken care of by proper disclosure, by proper compliance. Interviewing accounting personnel responsible for reporting related party transactions in the company's financial statements. This is again a very important thing, that the if the ERP system fails to point out that this party is a related party, then basically the onus lies with the accounting team. They must know that this entity is a related party. So the transactions, whether the if it's a purchase transactions, the purchases are made at a arm's length pricing, and entirely the transaction process which follows the legal compliances. And thirdly, the analyzing presentation of related party transactions in financial statements. Transactions are not barred, as I mentioned number of times today. The only thing is that transaction must be complied with certain rules and regulations and with proper disclosure. So analyzing the presentation of related party transaction in financial statement is an important task of the accounting team and also the company management. Whether accurate, complete reporting of related party transactions requires robust internal controls, because this transaction, suppose it is not mapped in ERP, not even the accounting team disclosing that this is a related party, then the onus is also on the internal controls, because how that party is being escaped as a related party, because why the party is not being mapped in the ERP system, why the party, despite it is fulfilling the criteria of a related party, is not falling under related party. So all these to be accurately measured, and the complete reporting of the same is required under the law. So a company's vendor approval process, because basically it can happen in the vendor approval process, or when a company is buying material from some sources, so that source, whether falling under related party or not, that must be ensured that if it's a related party, then appropriate procedure for measurement of pricing and also the related procedure for disclosure has been taken care of, and to help accounting personnel determine whether a supplier qualifies as related party and mark it accordingly in the ERP system. This is a very important point, because every time a transaction happens, the transaction will be flagged as related party and necessary compliance to be observed. But if it is not flagged in the ERP system, it is manually selected, then the accounting personnel must know it that it's a related party. So its transactions to be flagged or to be considered manually, and also the pricing and other related compliance factors to be measured and complied with. So a company may inadvertently omit a disclosure about related party transaction, which is very dangerous actually, because this may call for a legal action against the company. So as an auditor, our role is to observe that whether the related party transactions are properly identified, they are qualifying as related party transaction, and the related rules and regulations for the related party transactions are being complied with. Now we are going to the next item, cross-border transactions. Types of cross-border transactions. Cross-border financing, there are many types of cross-border transactions. Financing is one part, buying, selling is another part. Research and shared services. Many companies now in India, especially the big companies, they go for such offshore activities, that offices here or offices abroad, but they take different shared services like salary slip processing, tax identity, tax amount, and tax compliances. All these are looked from a different country, say as for example from India. So it's a sort of BPO activity. Now again, all these transactions are falling under a cross-border transactions, since more than one country is involved. It is not in the national boundary, it is outside the national boundary. So cross-border financing is one of the major issue. You must have heard about one term, which is Islamic banks. There's I don't know whether it's a right or wrong, but often they call it in at least many sources, they call it they are the terrorist financiers. So legally may not be proved it, or legally may be proved in some cases. But again, this sort of financing is unauthorized. So authorized channel must be considered any sort of financing. So here also cross-border financing is one issue where this transactions is a term refers to financing arrangement that crosses the national boundaries. So cross-border financing could include loans to other country, letters of credit, LC, or bankers' acceptance, bank guarantees, depository receipts, etc. So whether any form of these financial instruments are used, every time one must see that this is a cross-border financing and appropriate rules under that particular nomenclature to be complied with. So buying or selling products or services is in the general course of business, but still if it is buying and selling from one country to another country, then it again to be termed as a cross-border transaction. So this term refers to any buying or selling activities or products or services. Both may have different features with respect to infrastructure, permanent establishment, producing product or services outside the one's jurisdictional area, trading across the borders, and bridging between local resources and outside supply, etc. So again, there are different situations because in the one could be simply an infrastructure development in another country, and this country having a permanent establishment. So in every situation, the tax angle, because it is not, it is a subject is under management audit and cost audit, but these are basically largely associated with the taxation, because a country if having a permanent establishment in India, then tax treatment will something. If the company don't have a permanent establishment operating all throughout outside, but having some transaction with the Indian entity, that again attract this cross-border transaction. So one must be very carefully see the taxation laws for compliance purposes in this regard. Combined research and shared service is another area where most of the MNC companies, medical companies, they are involved. In present business styles, entities are finding it financier to have a shared service point. Entities are introducing joint research programs for entire industry as one cartel or chamber of commerce or group of commerce. This type of arrangements of shared services centers are also concerned matter in international trade if those shared services caters providing services across the border scattered in different locations. They are very useful to outsource the routine work in less expensive areas. So again, at the beginning of today's session, I said that basic aim is to inflate or deflate the cost and save a substantial part of tax in this way. If I higher invoicing, it will reduce the profit. So in a higher tax bracket, one has to pay lesser tax. A country having a lower tax bracket showing more profit there will actually benefit the entity as a whole. So this is the different technique taken by the including MNCs. So one must be very careful in the pricing formula and the compliance status of these related party transactions as well as the cross-border transactions. Now in cross-border transactions, the following things may be considered before entering into a cross-border transactions. Advanced ruling, legal compliances, contract with states, because there are different countries may have a bilateral agreement on the tax treaties which is existing. Change in law, an exit route in case of change in the law of the land. Choice between liaison office setup or branch office setup or subsidiary incorporation. Taxation, direct and indirect. Transfer pricing. International taxation applicable foreign laws. Corporate tax planning. Accounting and financial analysis, currency and repatriation issues. MNCs normally pay high dividends. What is the reason? because of repatriation of dividend. So these are the common things which we understand, we know a bit, but only point is that in all such cases, only pain point is the compliance. One has to comply with the existing rules and regulations. So legal and regulatory measures under cross-border transactions is a very important thing. Detailed schedule of all ongoing, pending, and threatened action, arbitration, audit, examination, investigation, hearing, litigation. All these are basically associated with the legal procedure. Hearing means a case is under consideration. Advocates are uh, pleading on behalf of their clients to protect the interest of the client. Claim, again, loss of money or loss of property, which is again claimed. Litigation, again, both the parties are contesting on some issue, which resulted in a suit, again, a legal suit. Audit, again, part of review or part of checking the legality of the transaction. Examination, almost same, because audit leads to examination, scrutiny. Again, these are the terms which are used. Investigation is nothing but a special purpose audit. Sometimes tax evasion is being claimed, so again some investigation from the appropriate agency being carried out, whether really it's a bypassing of tax law or tax not paying of non-paying payment of tax or at a lower tax. So all these are the different considerations. Governmental investigation, sometime government bodies ask for proper filing of documents so that government himself can take care of through investigation that whether the legality or legal clauses being protected or observed in course of such transactions. Sometime governmental inquiry happens affecting the entity's assets and operations. So these are in detail the various steps which are legal and regulatory measures. If you comply with, then you can, even if such audits, special audits, government investigation, then suit, claim, whatever be the situation you are to face, you can come out successfully because you are already complied with. But if you are not complied with, then penal actions from government side, penal action for breaching the law, anything can happen, anything can take place. So copies of all correspondence, reports to and filing with all regulators, including but not limited to the SEC, Security Exchange Control, state securities authorities, foreign securities authorities, environmental protection, and the Ministry of Commerce. So different legal bodies, in fact, in short, if I say like this, that the governmental bodies or sometimes the semi-governmental bodies, Ministry of Commerce, Ministry of Banking. Here I have not mentioned Ministry of Banking, but it's again a party for such transactions. Sometime maybe you must have heard this term hawala trading. So government, some authority pointed out that hawala trading is happening. Then RBI jumps into it, that how such hawala can could have taken place, so that the country's currency, precious currency, the country is losing. So all these typically comes under these cross-border transactions. Copies of all notices of legal or regulatory violations and infringements, including correspondence, reports, notices, and filings related to any dispute, alleged violation, or infringement by the entity, its agents or employees of any local, state, federal, or foreign laws, regulation, order, or permit relating to employment violations, unfair labor practices, equal opportunity, bravery. There's a specific act on bravery, UK Bravery Act. Again, there's a very vast act, so it's not in the scope of our study or not included in the syllabus. But bravery is again term typically used for getting some contracts, influence the decision of some contracts. Corruption, all of us know that corruption may be in the national trade also, And in international or cross-border transactions, corruption is again a big issue. Occupational safety and health, antitrust matters, intellectual property and environmental matters are the main area of concern. In intellectual property, suppose some medicine or some copyright taken in some other country, but without paying any royalty, that is used in another country. So again, which requires, which is actually a violation. So one must protect the interest of the IPR, intellectual property rights, so that this can be the any litigation, suit, or possible violation can be avoided. A local, state, federal, or foreign approvals, authorizations, certifications, clearances, licenses, permits, registrations, waivers related to entity, its operations and assets. So when it is not done, as I mentioned today also, and repeatedly saying that if you are following or if you're complying with the regulations, then it is not a point. But if you see that the authorizations are not taken, approvals are not taken, certifications not obtained, clearances not obtained, licenses not granted or not taken, permissions not allowed, permits not granted, registrations not taken, or if it is registration not taken but waiver is not, also not granted, under similar scenario you may face a suit or legal actions. So to avoid all this thing in a nutshell, the compliance is a major issue. Here, compliance part is more important than audit, because if you comply it, then audit will satisfy the or examine the compliance status. But if you're non-compliant, then audit will point out, but meanwhile the damage has already been done. So you may face legal actions or you may face heavy penalty. So one must be very cautious or concerned about compliance in such cases. Audit is again a subsidiary or subsequent course of action, which you may get a satisfaction that yes, I'm already complied with and my auditor is also saying so. But you cannot say that I have not complied with and audit says so, but meanwhile the damage has already been done. So a list of expenses by the entity under the schemes of corporate social responsibilities during last 3 years, along with description of ongoing social programs by the entity. These are very typical records which are supposed to be maintained to satisfy your position or to solidify your position, because in social responsibilities you are suppose in a country like Kenya, you are suppose taking some CSR project, and with the permission of their government and with the permission of Indian government, and also that project got approval from the highest authority of both the countries. So in that case, it is no harm, it is no point that you will face the suit or you will face any legal action. But if these are not taken, you invest in their money through one of your subsidiary company or through one of your relative in the CSR project of that country, then that may call for a legal violation and you are to be ready with the music of non-compliance. In cross-border transactions, again, can be extended to contracts, securities, and investments. A detailed schedule of companies in which the entity holds an interest over over 2% or more. In the first earlier slides, I have said that the related parties, those parties where the interest is more than 2% in the share capital. So here again, a detailed schedule of companies in which entity holds an interest of more than 2%. Copies of all offering circulars, private placements, memoranda, syndication documents, or other securities placement documents prepared or used by the entity over the last 3 years are supposed to be maintained. copies of contracts, agreements, engagement letters with investment bankers, finders, business brokers, or other financial advisors pursuant to any contemplated financial transaction over the last 3 years. So that is again 3 years is a period which is a minimum period where you have to produce your documents whenever you are called for. The contracts are again typically the contracts are entered into with the subsidiaries or the joint ventures or any strategic alliances or any other related party. A detailed schedule of all such subsidiaries, partnerships, joint ventures, strategic alliances, along with copies of agreement entered into, the related agreements, the other documents, everything to be kept ready as a supporting. Copies of all contracts between the entity and its officers, directors, shareholders, and affiliates. Copies of loan agreements, bank financing agreements, lines of credit. Because here again, RBI may step in because uh, RBI may want to know what is the purpose of such transactions, how such transactions are impacting the entity. They can also be a party to such transactions. Promissory notes, guarantees, security agreements, mortgages, indentures, collateral pledges, or other contracts with creditors. Copies of all contracts related to sales, agency franchise, dealer, marketing or distribution agreements, or arrangements, supplier or vendor agreements. So there's a detailed laundry list sort of thing. There are many, whatever you do, it falls under this. It's like that almost. Copies of all performance assurance. So it is better that appropriate documentation, proper documentation need to be maintained because otherwise anything can be questioned, and if you are not in a position to provide the documents, then they may ask to scrap such transactions if it has not happened, or if it has happened, then again they may ask for or they may penalize you. So non-compete agreements by or for the entity, that documentation should be there. Copies of all licensing agreements, franchise agreements, conditional sales agreements, copies of the entity's standard quote, purchase order, and invoice norms, including standard terms and conditions, copies of any understanding, letter of intent, LOI, contracts, agreements, closing documents related to any acquisition or any disposition of corporate shares, companies, divisions, business, or other significant assets by the entity. So in short, every type of transactions entered into, one has to keep proper documentation for the same to protect the interest of the company and to protect themselves from legal hassles. Because if documentation are not available, then it may lead to legal actions, suit, defending of the suit, then many things can happen. So it is, as I am mentioning repeatedly, that uh, audit is one part. Audit will happen in any case. You are asked to do the audit, but you see if what audit will do. Audit will try to see whether compliance happened or not. Same like that if you are under Factories Act, if you are asked to see whether the company is compliant under Factories Act, then what you will do? This appropriate sections of the Companies Act and to see what is the status of the company, whether the company is maintaining canteens, creches as stipulated in the welfare measures in the Factories Act. Like here also the same thing, that a transaction is a contract requires documentation. What sort of documentation? Documentation with the other party. What is the terms and conditions? If it's a sales, then what are the terms and conditions of sales? If it's a dealer, what is the agreement or terms and conditions agreed upon with the dealer? So like that, if you uh, before auditing, if you see that these are the rules of the game, then and if you are complied with, then audit can give an assurance that these are complied with. But if it is not, then in any case you have to uh, face the penal actions from the appropriate authority. Now, cross-border transactions also can be extended to financials. All annual, quarterly financial statements for the last 3 years for the entity and all its subsidiaries, if any, along with the latest available interim financial information. These are to be maintained. A detailed description of all accounting policies, including methods of depreciation, schedule of changes in the accounting policies, principles or procedures in the last 3 years, including justifications for such changes. Because suppose your inventory valuation technique you have changed from one to another principle, then why it is changed and what is the impact of such changes in your financials, that must be disclosed. Details and descriptions of any extraordinary or non-recurring items appearing in the financial statements, along with detailed schedule of all deferred income items during last 3 years. A detailed schedule of all the off-balance sheet transactions, including lease liabilities and credit derivatives. Off-balance sheet items are very dangerous actually, because there is no reflection in company's accounts. So these are very typical type of transactions where a deep understanding of the transactions and reflection in different transactions to be examined thoroughly, so that one can understand that this transaction is off balance sheet transactions. Say, as for example, if I say a loan taken from an NBFC without mortgage of any asset, then it's an off balance sheet item, and loan is not shown in the books and asset mortgage is also not in the books. So this is again, this sort of off balance sheet transactions are very difficult to come with unless one prudently follows the principles and goes deeper for understanding and unearthing such cases. A detailed description of the entity's internal controls, all available in entity-wide departmental budgets for the last 3 years. Any budget is a estimation for the future. It may happen in the same way or deviate from the way it is thought of. But if there is a proper internal control mechanism and approval mechanism, then every time if a budgetary sanction, when asked for money for expenditure or spending, then the appropriate authority level can examine that yes, it is approved in the budget and the expenditure planned for is echoing the thought which is considered or presented in course of preparation of the budget. So it requires a proper internal control mechanism, because suppose budget for CSR is 12 crore. Now you are asking for an expenditure of 10 crore. But what are the justification? If there is no internal control procedure, then you may spend that 10 crore in any activity, and ultimately you may transfer some of them to your CSR budget, some may not be. So if a proper internal control procedure is being followed, then while taking sanction for spending 10 crore, you know that whether that is falling under the budget which is dedicated for that type of expenditure. So a better internal control process can give you a comfort zone that things are in line and things are as expected. Details of all transactions between the entity and its subsidiaries, parents, and other related parties. A detailed schedule of long-term investments, including shareholding, bonds, and debt instruments, along with statements of terms and conditions related to investments. A detailed schedule of all property, plant, and equipment, PPE, including acquisition cost, accumulated depreciation, and depreciable life. So suppose you are buying a second-hand machine from one country, and the price you are paying, which is equivalent to maybe a first-hand machine. So then you have to justify that why this acquisition cost is so high. Probably, I'm just giving one example, that this particular, because in my service life, I faced one such situation, where as a company, we explain that this particular production line is only applicable for this industry in this country, and no other manufacturers in India manufactures in that way. that particular item. So that second-hand machinery from the parent company is very much required, number one. And number two, our workmen, they are trained to work with that machine only. So that justifies the procurement of the second-hand machine. Now, while coming to the pricing pattern, company again justified that the backup, since it's a second-hand machine, the backup services will be provided by the parent throughout the year on day-to-day basis. Their engineer will be here, their maintenance team will be here, so that the machine can be operative throughout the year. So that is why the additional price is on this count, and also the machine being overhauled before this supply takes place. So we justify the extra pricing, which the different authorities claim that it's almost the price of the new machine. So that was justified. So it is not the transaction was cancelled, transaction was barred, but with proper justification when appropriate authority measures that, yes, there is a fair transaction, then appropriate documentation and the way you are pleading for the case, that gives you the success. So uh, this is very important. When such type of transactions are happening, then you are to be 100% ready with appropriate documentation, so that ultimately you get the compliance certificate. A detailed schedule of all contingent liabilities and litigations and suits, the latest financial projections and estimates for the entity and its subsidiaries, including discussion of assumptions made. What I said just now, that the assumption was that these people trained only in that machine, and our production process can only fed by such a machine, not by any other machine which is presently available in the country or abroad. So these are the again the assumptions or the discussions which are supposed to be captured for presenting to the appropriate authority. The latest available capital budget, including discussion essential, non-essential, and strategic investments. This is again very important because for spending a large volume of money for a capex item, the budgetary approval, and also how that particular capex expenditure will help the entity in accomplishing his objectives. That is the as a part of strategic investment that must be properly highlighted. Now again, a detailed schedule of all property, plant and equipment, including acquisition cost, accumulated depreciation and depreciation life, and that is to be specifically maintained. A detailed schedule of all contingent liabilities, litigations and suits, because if you are contesting a liability as it's a contingent, it is dependent on certain happening or not happening, then again you have to be ready with appropriate logic, appropriate assumptions, so that you can defend your interest. The latest financial projections and estimates for the entity and its subsidiaries, including a discussion of assumptions made. The latest available capital budget, including a discussion of essential, non-essential, and strategic investments. A detailed schedule of all cash holdings and short-term investments. A detailed aged schedule of accounts receivable by customer and geography, along with confirmatory letters from the debtors acknowledging their debts as far as possible. Here you see there's a possibility of fraud again, because if the confirmation from the other side not being taken, the other day in the class I was mentioning about the Satyam incident, the PwC auditor never checked that the fixed deposits are in the bank's custody and bank certifying the value of the respective certificates along with the certificate number. What happened actually in front of him, the Xerox copies of the fixed deposit certificates were placed, and he thought these are the correct. Those, in fact, they are concocted because some of those certificates are already expired. Money has been withdrawn from the bank, but still they are shown as a live. So balance confirmation as a procedure is a very effective procedure for even for the another situation of a fraud. Many times it happened that even as of now, the practice which is adopted by most of the big firms and even some smaller mid-sized firms also in India, while certifying the annual accounts, they directly straight away approach the bank. They sometimes send their person to the bank to ask the bank to certify the amount of deposits or the concerned transactions of certain entities. They collect the information directly instead of routing through the client, because this gives a higher comfort that there is no possibility of fraud, because sometimes it can happen a fraudulent statement taken from the bank and then some figures manipulated, presented in front of the auditor, and auditor thinks they are correct. So instead of that, now the auditors are also routing directly with the bank so that they can get a higher comfort, higher accuracy. Now, this is again to cover up that no fraud can happen, or the possibility of fraud can be avoided. Now, here also the same thing, that debtors are scattered. So they go by confirmatory letters directly from the debtors. Instead of asking company to shoot out a letter and saying that previously what happened, the firms used to say that balance in my books. The client firm says that balance in my books of your account number so and so is rupees so and so. If I don't hear within such and such time, we will consider our balance as correct. This was the format which was used. And if you don't get something, it is construed as that. And if the fraudulent intention is there, then they will not get it, because they will somehow not post it, or they will not respond to it. But if I go for direct certification from the appropriate debtors or from banks, that actually helps the auditor to preempt the possibility of any fraud. So detailed schedule of revenues and cost of sales broken down into customer, geography, product for last 3 years supposed to be examined. A detailed schedule of selling, general and administrative expenses by division, subsidiary and geography for the last 3 years. So 3 years is a period which is considered as sufficient for uh, reviewing whether the transactions are proper or transactions are in the best interest of the entity. A detailed schedule of all capital expenditure for again last 3 years, including description of each major expenditure and abandoned projects, etc., if any, that also has to be maintained. A detailed schedule of all accounts payable by vendor, a detailed schedule of all outstanding payables, bonds, mortgages, and other long-term debts, along with terms and conditions thereof. So if these are complied with, then one can these are the actually the from the audit perspective, but underlying fact is that for 3 years, all records are to be maintained for every type of transaction. The auditor will scrutinize it, will examine it, and then possibly you may say that audit has been completed and auditor gives a satisfactory note. But in any case, if there is something something can go wrong, or something already went wrong, then auditor will point out that here there's a non-compliance, and this is there's a possible implication of penalty, or company has to defend such a suit if it is facing by the company. Now again, the credit facilities is another important factor. A detailed schedule of all long-term debt facilities, including capitalized leases, guarantees, and other contingent obligations. Actually, if you see these, all these are for different nature of transactions. Credit facilities is again one nature of transaction. So here again, detailed schedule of all short-term, long-terms, capitalized leases, guarantees, contingent obligations,
All these are to be maintained. Copies of all correspondence with lenders, including consents, notices, waivers of default, and compliance certificates are to be also to be maintained. So in any case, these are the forming part of documentation. So a detailed and accurate documentation can save your day, else you may face the legal hurdles. Even in case of taxation also, all local, state, federal and foreign tax returns and filings with documents relating to compliance with tax laws and regulations for the last 3 years. So again, 3 years is a period for which you are to maintain even that you are complied with taxation rules also. All types of taxations, whether federal, whether state, whether local, all type of compliance with respect to taxes are to be kept ready so that it can be examined. All correspondence with local, state, federal or foreign tax authorities, including audits, notices of proposed or final adjustments to the entity's tax liabilities for the last 3 years, assessment orders from the tax authority received in past 3 years, all agreements, consents and elections, requests, rulings, settlements and waivers made with any local, state, federal or foreign tax authority in the last 3 years, all tax opinions received from the attorneys, accountants and other specialists for the last 3 years. Suppose you are not paying or contesting on a particular ground after consulting one of the consultant, then you keep his opinion, his consultancy fees record and his detail, what he examined, what how he formed such opinion, every such document to be kept, because now the government or the appropriate authority is challenging you that this transaction is not a correct transaction, is not a valid transaction, it is violating such and such things. So you are to, for protection of your interest, you are to uh, keep ready such documents so that you can say that, look, I'm an office person, but my consultant, which is one of the biggest firm in consultancy in this country, or given such an opinion based on these things, which may be tenable or may not be tenable, because the authority can again challenge that specialist's decision and they can stick to their own decision. In many such cases, you will find that the tax authority won the match for the time being. Sometime maybe they reversed it also. So all such things can happen, and you have to keep ready with your documentation so that you can challenge at appropriate moment of time. A detailed schedule of all tax liabilities, tax basis of all assets, its accumulated depreciation, and the depreciation method to be uh, maintained, kept ready. Detailed schedules of all tax carry forwards and carrybacks, including their source, their expiration dates, and any limitations on their use. A detailed schedule of all tax-free transactions not listed on the entity's tax returns. A description of transfer pricing methodologies and description of advance ruling, if any. A detailed schedule of all tax liens against the entity's assets. Again, this transfer pricing is a debatable issue, because many a times transactions taken place, entities thought of this is the appropriate arm's length pricing, which subsequently challenged. And again, this calls for appropriate documentation, what ground this price was charged, and of course, the onus of proving that this is at arm's length pricing is on the entity. So documentation is a major issue in such cases. So now with this, we'll end up the related party and the cross-border transactions part. Now, in the hours left out for today's session, and today is the final session, as you know. So what we'll do, we'll go for a bit of usage of technology sampling, I said other day. So we'll today start with a sort of technology used in internal audit, and how this technology we can perform the higher levels, we can perform at a very higher level with our minimum resources. That part we will discuss here. I will provide you some of the case studies which will indicate that in a value additive situation, in the value additive audit, how we can conduct such audits, and how we can uh, look such transactions. So just in a couple of minutes, a minute or so, I will be back. আমি পেয়েছি দাদা, আমি পড়বো, আমি ক্লাসে আছি, পরে আমি পড়ে দিচ্ছি। হ্যাঁ বলো, ফোন করলে কেন? ঠিক আছে, ওকে, ঠিক আছে। So I am back again with technology in IA. Just for a bio break, I took a minute. So we are today in a world where digital technology is the uh, main theme in any activity, and with robotics and other use of advanced technologies in every sphere of business, we must understand the and leverage the IT to at least to survive. Otherwise, we will be dinosaur very soon. So digital technologies and advanced analytics are helping internal audit to improve the performance, because now even Excel or some there are softwares, audit command language, this type of or idea, this type of softwares help in a huge data collection and analyzing the data with the purpose of the audit and to fulfill the audit objective. Because other than that, it is very difficult. The day before other day, we in the classroom here we discussed about the sampling. But today, whatever be the type of sampling, it is prone to at least some errors. It may not be maximum, but couple of errors may creep in. So always one has to look at that with the minimum effort or minimum cost, how they can compile the entire set of data and go for a decision which is most appropriate with the data involved. So increasing business complexities and transforming the way entities do business, creating new landscape of internal controls and risk management. Large scale digital platforms are changing business processes from end to end. Even now, uh, sales done, and whether the material reached in the destination or not, the confirmation is taken from the apps. There are certain apps, most companies use that. But previously what happened, people used to come back with the LR acceptance of the dealer or storage point person. That document used to flow back to office, and then they confirm that yes, goods are supplied. Now again, there are certain companies who are in a very advanced stage. What they did, they supply the material and transportation bill is processed immediately, because details of the registered transporters are kept in their liability file, transportation liability file. So as soon as the ticker comes from the dealer with appropriate, of course, with controls, no one can do that excepting that dealer. So when this control, just like you can access only your bank account, so your ATM pin or other methods are used. So here also the same method or methodology are being used, and whenever they accept the material, the information immediately uploaded in the transporters portal, and the transporters bill for the said supply being generated. Even if something damaged supply, so it is qualification is already there that the dealer qualifies that say 30 pieces are damaged. So accordingly, the deduction for the 30 pieces take place and balance will be generated. So there are certain companies who do like that. It saves substantial amount of their manpower, and as well as the liability booking. Most important point is the liability booking, which is done instantly. Otherwise, what happens at the year end, whether the bills are all bills are concerned, collected, they are booked or not, all such informations are being collated to see whether the expenditure provision is being rightly made or not. But now many companies are doing like that, which is a correct process. So liability booking is immediate. Now the routine and respective tasks can be performed faster. It's again a routine task to provide the bills liability, which gives audit team members to go for more value additive performance in the case of audit. Because if this bill processing system is this, then they can go for, again they can take the entire data and they can see on test basis whether the supplies are made at the time what is mentioned in the or floated through app. So there's a sort of confirmation. They can also go for this conformity audit instead of checking whether every bill is being posted, every liability has been considered, every payment are considered in the company's liability. So correctly, accurately, timely. So all these are again fully complied with. Now new technologies cause three lines of defense in assurance, which is again we call it as LOD1, LOD2, LOD3. The LOD1 is actually the management who are deploying these technologies. LOD2 actually the risk management and compliance function. They see in this sort of apps or in this sort of computerized applications whether appropriate risk management and compliance are there. Suppose these bills, when these transport bills are generated, then all the compliances are being made or not. That again a part of job for the second line of defense. And the third line of defense is the internal audit, who can check. Now there is no sampling as I'm mentioning. They can entire database they can check and they can come out that the entirely company in 100% cases being complied with. So this is again a great achievement with technology usage. So data-driven audits are a hot topic in the auditing world right now due to the increased presence of risk for many businesses with respect to fraud and error due to pandemic included induced changes, and whether that's dealing with new remote procedures or turnover. So again, we heard about that blockchain. Uh, Blockchain is what actually the transaction can be uploaded and fridged. Only one thing which is not possible in blockchain, that is the physical inventory part. You may not be able to see the physical inventory despite there's a value in blockchain. But again, there are now certain technologies which has evolved that even in that technology, if we used, you may get a near about accurate inventory data, because those techniques are sort of drones are used with the appropriate camera fittings, so you can assess the materials. Stacking is done, and also sometimes those stacks are there's some equipments also, the stack heights, stack lengths, items stacked, their length, their breadth, everything can be measured remotely, which can give a almost I may not say 100%, but with 99% accuracy. So for example, one can leverage video conferencing technology to conduct fraud inquiries. It is now not necessary that to go to the meet the persons who, against whom the allegations are there to conduct to perpetrate a fraud, but you can have a sort of video conferencing for inquiring, use screen sharing, and now we are delivering as the class is on screen sharing basis. Secure goods to observe access controls, leverage read-only access to gain access to all the information needed. With these tools, auditors can start to use some of that earlier in the process to better frame conversations about things like year over year analysis, inform risk assessment upfront. Then when we start to tailor our audit program, the information brought into the data-driven risk assessment can help us determine the right level of testing we need to perform throughout the audit. Because again, we have seen 100% sample, but we observe there are a couple of things which may require a physical review or physical view of the things. Suppose we are saying that 2% of the granular materials are born in the air, so inventory losses this. Now, whether it is 2% or 3% from your database, it is you have observed that it is 3%. So whether it is 3% can happen or it should restrict to 2%, then a separate set of exercise that how much granular is the material, what is the wind speed, from which direction wind is blowing, and what is the average if you see 5 or 6 days data you collect from the spot, then you may have an idea that whether 3% is a feasible or 3% is a manipulated figure. You are analyzing the data, but data itself is a manipulated data. Accuracy is not there. Then how you can check it? So you can check it in this course of action. In the backdrop of all-round use of technology in business area, internal audit functions also face an internal demand to execute their activities in a more innovative and efficient manner. Because, as I just mentioned, that if you are not updated yourself, then you are dinosaur. Today, GST is a reality. So unless you know what is GST in course of your audit, it's not a matter that whether institute class covered it, study material appropriately captured it, examination questions were properly fed. These are the questions which you may always go on asking. But the thing is, unless you know GST, how you can perform your audit? It is your best of interest. You must know it. So similarly, in use of technologies also, maybe in this forum we will discuss or talk about 2, 3, 4, 5 instances of how technology can be leveraged. But there are umpteen number of cases which in course of your work through you should come across. If you come across how to deal with that, that is you are to prepare yourself. It is not possible to spoon fed 100% and to see that yes, this is the reality. Now we are going to a typical case study uh, because case study is forming part of your course. And this is one case study where we have leveraged the technology and the company got a very good result. And this was a suggestion from their audit and control department. So that is why I'm flagging it here because of course we change data and change scenario a bit, but this is a reality. In a limestone mine, volume lifted as per distance covered by loader trucks as paid post-payment of the trucks. The distance-wise rates are as follows. From lifting point to crusher, up to 2 km, 100 per metric ton kilometer, 2 to 5, 200, 5 to 10 km, 400. The distance were fixed long back since inception and rate revisions at 2-year intervals since last 20 years. So in 20 years is the present rate. So rate was X, and every year every 2 year there is a negotiation. The distance part remains same. The fuel part, fuel price hike accordingly, some percentage of fuel price hike is given along with the contract, and also the sort of loyalty bonus, which is also again added. So at the end of the day, every 2 years, a fresh rate agreement takes place. With the introduction of GPS, again, it's a technology. So department suggested that why don't you go for actual distances? And the benefit of actual distances is that now what is possible that the truck which is actually traveling 2 km, but it indicates it is 2 to 5 because it may take a different route. It may in the same place may walk 5 times and then come. So the rate will be doubled. So in any case, there is a loss to the company. So company agreed to install GPS in every vehicle. So with the introduction of GPS as recommended by Internal Audit and Control Department, all truck movements are captured from lifting point to crusher, and the auditors now used to review the truck-wise distance captured. This has resulted in, as I said, that sometimes physical checking is also required, because whether trucks are taking unnecessary turn, they are going back a mile and then coming again front. So whether there's a point to watch, because data is data which will indicate yes, it is 2 to 5 kilometers. There is no point in arguing on that. But if the truck behaves like that, it went back 1 kilometer, then comes forward, then definitely it will fall within 2 to 5. So from the actual point, the auditors observed, they kept standing, that whether it is entirely the movement which is just required to carry the load is taking place. And by this way, companies saved 20 crores as per the number of trips recorded based on different distance grid traveled by the vehicles. So the summary is change the way audit was performed earlier. So as I mentioned that now auditors' role is very important, and auditors also to be equipped with the modern thoughts, with the modern gadgets, modern equipments, also analyzing the data in complete data set, so that they can understand the pain point more importantly, more visibly, and they can guide the company for appropriate decisions. So complex business operation by way of GPS introduction in trucks and distance mapping, technological risk for GPS and data maintenance, and strengthening of controls with respect to payment for lifted limestone. So now actual distance covered, they are getting paid. By the way, company saved 20 crores, which is not a matter of joke. So this technology usage helped the company through the audit department, audit and process department is a big positive. And in our value additive function, because audit is no longer a ticking function, just you see whether payment is made, but payment made under what circumstances, whether the payment premise is correct or not. This is one such case, that payment premise is not correct. Accordingly, premise has changed by introduction of GPS, and the benefit accrues to the company. There is another case which is due to time constraint. There may be many cases, but one or two I am just showcasing here. Just to give an idea that such case studies, maybe they are in your examination, then how to handle those case studies. So case study number 2 is a coal mine named Nowhere, lifts coal and the same transported to the plant named Elsewhere for consumption in course of producing Utopia. Utopia is an item. So transporters were paid based on material movement volume to plant. 2 years back, the auditors reviewed the area and some operational improvement was suggested. Those improvement points are laboratory facility at both the places, which Nowhere and Elsewhere, to assess quality of coal shifted and received, including calorific value of dispatched coal, monitoring truck movement for the total distance of 800 kilometers. Actually, the distance between the two is 800 kilometer one way. So the truck availability can be increased, minimization of stoppages and hours spent. Truck sealing process, pre-numbered seal with single usage to preempt tampering, and full cover by tarpaulin to avoid contamination, and unauthorized lifting of coal from the truck and replacing equivalent weight by putting other materials in truck. So basically, the fraudulent activity by the transporters and his team, to stop that was a primary objective. Penalizing truckers on account of difference in quality between both the points, and penalty for delay in movement and stoppages over specified numbers and hours. GPS fitted for road followed and deviation from normal route calls for penal action. So these are the suggestions A, B, C, D, E, F from the again audit and control process department. So the company agreed to implement this. Now, what are the benefits accrued? Audit team extracted the SAP data from respective T codes through a software ACL by Open Database Connectivity, ODBC. is an open standard application programming interface that allows application programs to access any database. So ODB is again a technology through which any, not only from SAP, from any ERP, the data can be extracted directly. So you need not run about the data, run for the data. Behind the person, give me the data, give me the data, 1 letter, 2 letter, 3 letters. This still they are ignoring, audit is ignoring, but that days are gone. You can directly collect the data through this mechanism and then analyze the collected data according to audit objective by developing macros. Macros are used to make a sequence of computing instructions available to the programmer as a single program statement, making the programming task less tedious. As for example, truck stoppages over 4 times. You have decided that truck should not 800 kilometers, truck should not stop more than 4 times because for natural calls, bio breaks, for food, water, drinks, tea,